Hello, good morning, and welcome to the latest Redwoods Darling Kerr webinar. Today we will be discussing how we work with our clients to calculate the market value of their business, and then we will discuss the process by which we market the business for sale and ultimately generate the maximum deal value. If during this webinar you decide that you would like a virtual business appraisal so we can assess your business market value individually, then please indicate this in the question box or wait for the poll session later in the webinar. Now, on to the webinar content. And firstly, I'd like to start off by introducing today's panel and ask them to briefly introduce themselves and explain their role at Redwoods Darling Kerr. First up, Robert Yates.
Hi, my name's Robert. I'm Head of New Business for Redwoods, dealing mainly with instructions to businesses on the market.
Matthew.
Good morning, I'm Matthew Parkinson. I'm one of the Associate Directors at Redwoods Darling Kerr, and my role is to appraise businesses with a view to bringing them to the market.
And Jenna? Hello, Jenna. Okay, apologies for that. Looks like we have a slight technical issue. The recent Covid-19 pandemic has sent shockwaves through the business community and created a two-tier level of impact. On one hand, there are businesses who are either closed and or heavily impacted by the crisis. And on the other hand, there are businesses who have suffered minimal impact and or have improved their trading position. Many businesses are closed at present and their main focus is on preserving cash and protecting their staff. In most cases, business owners are taking advantage of the government furlough scheme. Businesses which are continuing to trade tend to be linked to medical supplies, food, logistics, or manufacturing type activities. Many online businesses have also seen an increase in demand, although the ability to service this demand is restricted by social distancing rules in their warehouses. We at Redwoods Darling Kerr have been impacted by the lockdown position and are embracing new forms of technology to minimise the level of disruption to our business and to our ability to assist our clients. Rob, how are you managing to provide clients who wish to sell their business with market appraisals given the current lockdown restrictions?
Thanks, Andrew. In my 12 years working for Redwoods, I've never seen a situation where the whole of the business was asked to close with just 24 hours notice. Since the lockdown, we've been working with new clients to discuss their exit strategies using a combination of telephone and video conferencing. We've also rolled out a new instruction process with digital contracts, which enables new customers to instruct us during the lockdown period.
Okay, and how would you describe the mood amongst the clients who you are talking with at the moment?
Frustrated. The majority of business owners have been trading very well and been in a very strong position for the last few years now. They've been building up their businesses, been working towards their exit plans, and 2020 started off very well for the majority of businesses. And this pandemic has hit some businesses just like a brick wall.
So what recommendations are you providing to the owners of those businesses?
Firstly, not to panic. There have been economic shocks in the past, the Great Recession, Brexit referendum, and now this virus. We're hopeful that the impact of Covid-19 will start to reduce as each month goes on, hopefully with a level of deal completions by 2020. We're able to use this time period very closely to work with our clients to ensure that the information required for their sale is up to date and ready to present to buyers once their projects are launched after lockdown. And another recommendation is to focus on what the desired goals are. Business owners have a goal in mind and we'll work with them to achieve the outcome. For some business owners, it's about securing the best price. For others, about obviously a quick sale. And we'll tailor our service to deliver what's best for our clients.
Okay, thank you for that, Rob. Matthew, without wanting to age you, you have been working in business brokerage since 1996. This must be the latest in a long line of economic shocks which you have worked through.
As you can see, Andrew, I started my career at a very early age. During the last 25 years as a broker, I've seen many scenarios including the dot-com boom, dot-com bust, economic shock, obviously which took effect after 9/11, the boom and subsequent recession of the early 2000s, and more recently, the Brexit referendum and the negotiations. So there's been many scenarios which have had an impact on business and business sales. All throughout these periods, people still continue to buy businesses and to sell businesses, and inevitably, business life carries on.
Okay, if we focus on the current crisis, how are you working with your clients to establish their market value?
As most of you are aware, our usual method of business appraisal is to calculate the EBITDA. This is earnings before interest, tax, depreciation, and amortization. We've taken on board the EBITDA C methodology, which is to calculate the EBITDA but add the C, the calculation prior to COVID. This is important. We create a value based on pre-COVID trading. Secondly, we look at the impact which Covid-19 has had on the individual businesses. If the business has not been affected in any negative impact, then we will revert back to our standard mechanism for market appraisals. If the business has been affected negatively, i.e. the business hasn't traded maybe for a couple of months, etc., then we want to consider the time period which the effects will last for. Once we have all the information available to us, we will then estimate when the business will go back to pre-COVID-19 levels and amend our marketing appraisal accordingly. All business sales are different. The impacts vary greatly. It's therefore important that the market appraisals are discussed based on information which is made available to us at each business.
Okay, so how does that then translate into the actual market value?
Your accountant will look to lower your profit for tax. We then seek to reverse this position as we look to create the saleable EBITDA. In some instances, we can create two EBITDAs. One is based on a first-time buyer scenario. The second is based on a corporate acquirer. The reason for this is that different buyers will require a different cost base post-acquisition. We do this to drive additional value for our clients. I suppose once the EBITDA figure has been has been calculated, we'll then apply the relevant multiple for the individual business. This varies on sector, geographical location, and obviously size. Once all this is completed, we're in a position to agree a target price going forward. One thing which I would say is, it's an additional point we need to make, is that sometimes the target price is driven by additional factors which are personal to the business owner. This is why we treat all businesses individually, creating a market value for each individual business based off the information that's available to us.
Okay, thanks for that. Very interesting information. Obviously, as we talk through this webinar, there's a box in, I think, your bottom right-hand corner that has questions. If any of you would like to ask some questions, of which some are coming through now, then feel free to type the questions at any time. And towards the end of the webinar, I'll move on to the question and answer session. I think I agree with you, Matthew, about the need to package up the COVID-19 impact and report it separately from pre-COVID financials. At the end of the day, when people do SWOT analysis, the thought of a global pandemic which just absolutely causes something like this is unheard of. It's unprecedented, to the point where there is now obviously an issue with insurers as to whether or not they're going to cover, etc., etc. From our point of view, it's about packaging up and saying, look, this is the COVID impact. This was the business and is the business beforehand. Now, how do we get to the position post-COVID, and what are you going to do? So, Rob, how do you think businesses can overcome the COVID-19 objections when presenting their business for sale and protect their business value?
Well, there are a number of actions business owners can take to overcome the objections buyers may raise to protect the value. One is up-to-date pre-COVID financials. It's important to demonstrate the start of your financial year and to show the full forecast of what the business plan was in line with. Secondly, pull together a COVID and beyond plan. It is important to be transparent, to show the negative position, but also to show a route out of it and back into profit using reasonable assumptions. And then I'd say finally it would be marketing. You know, what is your marketing plan? How are you going to attract new clients? What does post-COVID marketing plan look like? Have this ready to share with serious buyers, so they buy into what you're trying to achieve. It's possible that we construct it's possible that we can construct a partial earn-out plan to support your exit deal. This will be subject to achieving key performance indicators. And if buyers have confidence in your plan, it will reduce the negative impact COVID that will have on the sale price.
Okay, all right, thanks for that, Rob. So obviously, we did have 3 speakers. Jenna Caldwell, who's having some technical issues at the moment. And now I'm pretty aware of what Jenna was going to talk about. Matthew and Rob have so far spoken about how we are using technology, how we are adapting what we do to engage with clients who want to sell in 2020. Jenna was going to talk about what's happened with regards to her team and the teams in general within our operational teams. And we have now a number of staff who are home working, using technology such as this to carry on with the sort of deals. Pretty strange for them, because they're a very close-knit team and they are used to working closely day in, day out. So one of my key questions to Jenna was actually about the corporate sales process, which some of you may or may not know. The corporate sales process is something which most corporate boutique advisors will do. However, at Redwood Sale, we have enhanced it specifically for healthcare, for childcare, and for other key markets that we deal with. Rob, question for you. Obviously, you've been working with us 12 years. You know, you have been involved in our corporate sales process. You've been involved in the onboarding side, as Matthew has, with pitching to clients. What do you think the key strengths are, Rob, with our corporate sales process?
I think the key and the best is the process in itself. We were able to obviously demonstrate, and we have done over the years, that we can extract the best price possible by running through this process. So I think that it's getting it ready for sale is the best part of the process, and getting the financials together, showing the last 2 to 3 years, if there's any projections to show what the forecasts look like. And then there's also the research that goes into the buyers, who we're going to target. Obviously confidentially, of course, and all this is approved by the clients. I think for me, it's the process start to finish, getting it ready for sale, going to specific buyers and running them through a bidding process, which obviously helps extract the best price possible for our clients.
So prior to Christmas, I think it was about summer last year, you and I, well, predominantly yourself, were working on a deal known as Project Gold. And you, obviously, for those people who aren't aware, and if you go to our website and have a look on our childcare brochure, you'll see a case study on Project Gold. Would you like to just give an outline of Project Gold, Rob, and then we could discuss what we did as a business to maximise the value on that?
Yeah, so we ran a process, a specific mailer strategy to target groups within the UK. One in particular was Project Gold that came forward, and it was a group with 2 freehold and 4 leasehold settings across the West Midlands. The client was unsure whether they wanted to sell or not. It was just initially I felt like it was more of a fact-finding mission, because they believed that the value they wanted was a little bit out of the market of what they think was realistic. Speaking with Jenna, obviously deals with the selling side, and she was speaking with the buyers that she deals with predominantly, and she felt that there was a really good opportunity to get the price that the client wanted. So we put together a bit of obviously a pack that obviously we went down to see the client, and to show that the opportunity was there for him to get the price that he wanted within a short timescale. And running that process did exactly that. You know, in terms of initial offers and what we actually walked away with was obviously far greater and better than we actually anticipated when it came to market.
Yeah, thanks for that. I mean, I know we talk about a process, and quite frankly, when you talk about a process, you switch quite a lot of people off, unless, of course, you're an accountant. But ultimately, there's a science to generating the smoothest process mirrored with the best multiple, mirrored with the best price and the deal structure. And if I relate back to the current climate, you know, we are still dealing with buyers now, and actually our buyer interest now is back to the end of February. Slight different mix. We've now started to see buyers enter the arena who have successful businesses that are not in some of our key sectors, who are now looking to expand. But part of the process, and Jenna was going to talk about the Project Sphere, where she actually selected 11 buyers for Project Sphere to go to. And a bit like Project Gold that Rob was talking about, I think it was something like 6 or 7 buyers that we went to, and it was actually an international buyer who acquired it as part of their generation within the UK. Our process is about research, it's about presenting the information, and it's actually about finding the right buyer who it's worth. It's part of their expansion plan. And actually, it's not what is your value, as in we sit there and say this is all you're worth, but actually what is your value to the buyer. And if we do our job properly with yourself, with the right information, and we get that value correct, then we can get you more money, more value, more deal structure, whether that's cash on day one or more earn out, something like that. Matthew, one of the questions just come in that I do think is very interesting, and I'm going to ask you about it. And this is something that is very relevant to healthcare or childcare. So obviously, Rob and I are talking about the corporate sales process, about deals, etc. Confidentiality. Now, I presume you are asked about confidentiality in every single meeting you go to. What do we do that ensures that we are able to keep your business sale confidential?
Very good question. I think personally at Redwoods, we pride ourselves on our confidentiality. It's a very discreet process that we operate because of the sensitivity of the sectors that we're working within. And we offer various levels of confidentiality. We can work on a confidential sale, which is bound up by an NDA. And obviously, all interested parties adhere to the terms of the NDA, which then becomes the trigger that the information is then released to those people. Alternatively, we can operate a enhanced confidential sale, which is the same process. People get to the point of signing the non-disclosure agreement. And at that point, we then have a conversation with the vendor, give them obviously information about who's requested the information, and they become the gatekeeper. So obviously they basically determine who we can and who we can't talk to. So we would never really recommend anything less than a confidential sale. But again, we understand to certain clients, they want that little bit more information about who's requested the details of their business. And again, the enhanced confidential sale is a good option to those people, but for us, confidentiality is key.
And as much as the onus is on ourselves to run a confidential process, what advice, Matthew, do you give to owners about the appropriate time for them to speak to their staff about what they're doing?
Again, it's a difficult dilemma for a lot of business owners because they have loyalty to their staff, and a lot of people genuinely say that they feel quite guilty about going through this process without bringing the staff into their confidence. However, it's not something that you can do. We have to work on the basis, obviously, that we work obviously through this process, we secure the purchaser, we go through the due diligence, and only obviously once we get to the point of exchange of contracts, at that point, we really then suggest obviously opening up to a wider target audience and making the staff aware obviously of the process that the client's been through.
Okay, thanks for that. Rob, another question. What is it about Redwoods Dowling Kerr and their way of marketing a business that's different from other brokers?
Good question. So I believe that when it comes to selling, there's 1 or 2 reasons why a business doesn't sell. One is the value, and the other is the marketing. With ourselves, we pride ourselves on one of the best marketing methods that we have, where we cover across all the top business sale websites, confidentially, of course, and all relevant trade publications. The way that we present it, I mean, our results do actually speak for themselves, obviously our 5-star Trustpilot, but it's also the value that's obviously key. And then what we do, whilst we appraise, we're realistic, and then whilst it's on the market, we manage the process. So I think that what makes us stand out is that we'll do what we can for our clients to generate as much interest as possible. And sometimes that might be, a slight reduction to then build the price back up once we start getting it through. But it is all about running a proper process to get the best price for the client.
Okay, thank you for that. So yeah, Gremlins with Jenna. However, her email is unaffected, so she has actually emailed me some responses to some questions that are very, very relevant. One of my questions to Jenna was, we talk about the corporate sales process and we talk about all the things we can do to maximise your value of your business. But obviously, along the way, things happen, things come out, especially at the moment. So we wanted to talk about an experience about when a client ran into difficulties during the sales process. And Jenna's flagged Project Amethyst, which completed last year, where, and it's actually quite frequent that some of these issues do come up. But essentially, once a deal was agreed, a lease, there was lease terms that were not exactly as they seemed. So basically, by being transparent and attacking the deal, what Jenna managed to do was renegotiate the position and actually deliver a result for the client, which was 700 grand in excess of where the business would have been worth with those leases taken into account. So many people will speak to the associate directors when they go out and they will say, right, I need to do this, I need to do this, I need to do this, I need to look at my leases, I need to look at my tax, I need to look at this. When we run the corporate sales process, there's a period of time of about 6, 8, 10 weeks before we launch, where we will start to analyse your business ahead of a sale. And you will then be brought into the loop with tax advisors, with specialists. We can introduce them, you'll have your own. We will challenge some of your base due diligence. Some of you were on the webinar last week when we had the lawyers on who were talking about possible COVID clauses and things like that. So, a question we're always asked, what happens if the unexpected comes up? Our process is designed to deal with that, because if we've chosen the right buyer and you've got the right deal, they want your business, they're going to acquire your business, and so we can extract extra value when things don't quite go to plan. Another question was about what's happening at the moment. We are under lockdown. We are hoping to see some of lockdown eased from Monday, with possible return at the end of May. Well, we're still doing deals. We had a healthcare deal agreed this week. We've had a £7 million childcare deal agreed this week. We are working with a number of buyers who are not necessarily bank funded. Albeit banks are now approving new loans, albeit with a 3-month delay to valuation while we look at COVID. So I guess in summary, what Jenna was going to bring into play is, yes, it's not ideal, but for our key markets, there is demand, the demand that's been there all year in the last 2-3 years. And actually, with some of our international buyers, the recent currency depreciations are working in the favour of the international buyer from an acquisitions point of view. Now, just before we move on to a couple more questions, I've got a couple of polls I'd like to do. So you will see on your screen now about future webinars. Now, I would like to guarantee that future webinars will have no technical problems, but we will see on that one. So please click more than one if you wish. What future webinar content topics would you like to see from Redwoods Darling Kerr? Accounting advice and business support on a Q&A basis, so we'd bring an accountant into play. You can ask questions and answers. Would you like to understand more about the legal process of selling your business? Cost savings, how can you reduce your fixed costs? This is something that's going to be very important to business owners. And we know some very, very good organisations who can really get to grips with fixed costs, energy, insurance, all that sort of stuff. So yeah, I think that's a positive one. Funding for acquisitions, what funding routes are open? We've got some contacts with banks and broking, and then also HR, we'd be interested in that. So 50% of people have now voted. If I could just give you 5 or 6 seconds to click the buttons that are relevant to you. 4, 3, 2, 1. Thank you very much for that one. And next, This will be interesting. Do you have any intention of marketing your business for sale in the next 12 months? 3 very simple, straightforward answers: yes, no, or yes if the price is right. Now, I'll be very interested to see the responses to this one. Current 40% of you have now voted. If we just do another 5 seconds, just feel free to click the one button that is relevant to you. 5, 4, 3, 2, 1. Thank you. And finally, just a quick one for us. Would you like to receive a personalised virtual business appraisal? Select one of the following. Quick 10 seconds here. Yes, no, or maybe. Thank you very much. If you just keep going. 5, 4, 3. Wow, that was quick. Everyone was a lot quicker off the mark with this one. We're just at 50% now. 3, 2, 1. Thank you. If any of you change your mind, by the way, feel free to obviously email in. Okay, so let's have a look at these questions. This is an interesting one now. I think I will have to answer this one. How many sales complete from offer accepted going forward, especially with regards to the nursery market? So if I take childcare and healthcare as isolated sectors, both are regulatory approval. So that does add a complicating factor to these deals. I can only speak for ourselves, but generally speaking, you're looking at about 15% fall off from sale agreed, from offer accepted to sales completion. Now, our statistics are significantly lower than others because we make our buyers jump through more hoops to get those sales accepted. So if you think of buying a house, you will view a house once, twice, maybe 3 times. You will speak to an estate agent, you'll put an offer in. We will not just allow anybody to view your business. We need to make sure that these buyers are ready, willing, and able. And buyers which are ready, willing, and able last year might not be ready, willing, and able this year. Nobody wants to commit to legal fees and also the emotional stress of a sale unless they are confident that that buyer can deliver. Now, do things come out of the woodwork? Yes. But if you've got a ready, willing, and able buyer and the vendor is also ready to go, then generally speaking, we can negotiate many, many things. And if you look at our Trustpilot reviews, look at some of the press releases we've released, you'll see some real honesty from some of the clients in their comments about how we've had to work night and day in the final stages to deal with things. And one that springs to mind was a large healthcare sale that we did a couple of years ago. And 4 days before completion, the vendor's solicitor, who was quite frankly not up to the job, just walked off the job. She demanded full payment before she would send the information over. We managed to speak to another legal firm who worked through the weekend and managed to get the deal completed on time, but that was extremely stressful. So yeah, about 85% I would say comes through on that one. And then okay, so yeah, thank you for the question on the technical issues. Yes, it does look like there's some technical issues. Some of you have not had a vote option. What I would like to do is, if you haven't had a vote option, but you know what you want to answer, could you please email webinar@redwoodsdk.com. That's webinar@redwoodsdk.com. After this event, I will give the laptop a good kicking and hopefully reboot if I speak to IT, they'll tell me to turn everything off and turn it back on again. And then hopefully we can have uninterrupted webinar issues. This is the 3rd one, and the first one we've had technical issues, so apologies for that. Thank you very much for everybody's time. I'm going to wrap up there and wish you all a lovely bank holiday weekend, and take care. Thank you very much.
We don't have a people that's the multiples could be very well. That's all. We can have so many